Hey, welcome investors to the 40 Finance channel. Today we're going to talk about Apple versus Microsoft, sort of a short-term forecast heading into January of 2022. And as much as these companies get lumped together oftentimes with stock research, they're really quite different when you think about it. I mean, Apple is a consumer product focus, almost retail company, whereas Microsoft has sort of changed over the years, and they're way more into cloud computing, corporate contracts. And while they'll always be known for the Windows operating system and Microsoft Office, the fact of the matter is they make a lot more of their money on the corporate side of things than they do with individual consumers. Now, for the purposes of this video, though, we're just going to focus on the companies as a whole, talk about the money that they generate, where the stock stands today, and which one do I think is the better play between now and January. Most sensible investors would say you could easily own both of these stocks and win in the long term, and they've both gotten to that mega cap level where frankly you could just buy the QQQ or the S&P 500, have plenty of exposure to both of them, but for entertainment we're going to stack them up against each other here. All right, we'll start with the chart view here for Apple. Take a look at some of the technicals. This is a 1-year chart, and they both have very similar charts, to be honest with you. You can see that Apple's pretty much flowed with the market. You have your high in February, and then the subsequent dip that we saw in the market. Then in May, of course, May 15th or so, we saw some more weakness. And we've had the big bull run here. I think we're on a 7-month stretch of positive gains in the market. And Apple finds itself way up at $153. Which looks like $10 over the 50-day and about $30 over the 200-day. On the RSI front, you're at 65 today. Trying to eyeball back here a little bit. You did have a little bit higher, about an 80 most recently over 4th of July weekend. Now let's flip over to Microsoft. Pretty much the same thing. Here's your market patterns. February was their former high. They also had a high point over in May, just like everybody else, and up from there. Today we are at 302. That puts you at $15 over the 50-day and about $50-some over the 200-day. RSI right now at 64. Looks like the last peak, once again, around July 4th at about an 82. All right, before we get into price projections, let's get into some of the financial highlights here, if you will. And I'm going to start with the income statement. This is for Apple, trailing 12 months, $347 billion. Gross profit of $105 billion. On the cash side, you got $62 billion or so in the bank, about $135 billion in long-term debt. So double the long-term debt as opposed to the cash level, but when you're making this much money over a 12-month cycle, you can afford to carry long-term debt like this. And Apple is known right now for its share buyback program, so that factors into some of this as well. All right, now on the Microsoft side, we've got $168 billion in trailing 12 months revenue. So if you remember from the previous page, that's less than half the revenue that Apple generates. However, if we look at gross profit, $115 billion, that's about $10 billion more in gross profit than Apple made over the trailing 12 months. So this, I think, is something that gets overlooked a little bit with the old Apple versus Microsoft debate, and that is, Apple makes a lot more revenue than Microsoft does, and that's the nature of consumer products, particularly manufactured products. But Microsoft is essentially more efficient from a gross profit margin. So it just goes to show you how they play in different spaces. Anytime you get into retail and consumer, you're going to struggle a little bit versus a cloud-based company in terms of profit margins. Now, on the cash side, little different situation with Microsoft. They've got $130 billion in the bank and long-term debt of $82 billion. Not much concern there, as their revenue is twice as much as the debt load. But when you think back to Apple, interesting that Microsoft has, give or take twice as much money in the bank as they have debt, whereas on the Apple side, it's sort of the flip-flop. They have twice as much long-term debt as they have cash in the bank. And again, that sort of gets back to the share buyback program. There are plenty of people that criticize Tim Cook's strategy on the share buybacks. It's probably more or less an opinion, and for this video, we're just going to focus on the numbers. All right, switching back to Apple, now let's start to think a little bit about our price projections going forward. And to do that first, we need to get a feel for what valuation Apple is trading at. And I'm going to skip ahead right here to forward PE, and we're going to go back in history on an annual basis. They're at a 27.5 right now. Back last September, you're about a 30x. But you can see historically, you start to think about the retail play again and the consumer play. Apple was in that 17, 15x sort of range on their forward PE valuation. If it were to return to that at any time, if the market was ever to take a different view of Apple and decide that they were not going to give it the valuation that it has today, you would see a significant drop in Apple's share price. I don't think that that's going to happen overnight, particularly in the environment we're in right now with low interest rates. But I do think that this 27.5 could see itself chopped down into maybe like the 25s, particularly during a market correction. All right, same thing on the Microsoft side. We have forward PE today, 33.6. Last June, their fiscal quarter runs through June. Apple's, on the other hand, runs to September. We'll talk about why that matters here in a minute. But from a valuation standpoint, Microsoft has been in the 30s as well here during these pandemic fiscal years. If you go back historically, similar situation that we saw with Apple. The transformation from a tech company into the cloud, though, has given Microsoft a slightly higher valuation on at least an average basis. If we go back to 2019 and 2018 when the whole cloud thing started, you're looking between 24 and 26 on your forward PE valuations. Today, we're obviously in the low 30s, and it wouldn't surprise me to see a couple points ticked off of these valuations too, if we were to see some things like increasing interest rates, market correction, etc. So when we do get to price projections, you're going to notice I'm not going to give them this 33.6. I'll probably bring that down to 30 or 31 when we get into price projections. All right, so we did a quick comparison on the back-end financials, and we talked a little bit about valuation multiples and how they've changed over time for both companies. In order to project ahead to January, though, we would have to take our valuation estimate, a sort of forward PE estimate, and combine that with an earnings estimate. So that's what we're going to do here, and we'll kick it off with Apple. And if you've watched the channel before, you know I like the Seeking Alpha table view, which puts all the analyst data into one place. And what we have here for Apple, right now Apple is trading on a forward basis for their September 2021 earnings report. So this will come out either late September and October, right? This is where Apple's price is focused on right now. And you have an EPS estimate, a consensus estimate of 556. I'm talking in this video, though, about a January price target. So we have to look a little bit further ahead. This isn't going to quite cut it. So I'm going to say that the market will switch its view to September 2022 after we get out of them closing their financial year. And right now, for Apple, it's not super rosy on EPS estimated growth. You see here the consensus is only 1.21% over 2021. Now, I will say that what you typically see on good quality companies like Apple is that slowly over time analysts raise that target. So I'm fully anticipating that by the time we get to October and get a little closer to January, that Apple's price target for 2022, or excuse me, their earnings target for 2022 will go up because they've proven so successful in the past. I'm going to put this number at 6 for their EPS target in and around January of 2022. All right, same thing over here with Microsoft. And Microsoft, we play a slightly different game because their fiscal year ends in June. So their July/August earnings call, which they recently had, that closed their books for 2021. So in their world, analysts are focused on the 2022 numbers right now and probably will be well into January. Right now, that estimate sits from a consensus level at 879. 10% growth over the year prior. You can see the forward PE today would be in the neighborhood of 34. I think it was 32.5 on Yahoo. But we are going to stay in this fiscal year for Microsoft. We're not going to jump out further because we're only a few months away from January. Now, the big call out for both of these companies, I'm going to scroll down to revenue. This is Microsoft revenue. And you can see some of the out years. We're just going to take it from a growth standpoint. So this fiscal year, growing double digits. Next fiscal year, double digits. All of this is super impressive when you think about these kind of numbers that are coming in, $20 or $215 billion, and they're still going to manage to grow it by about 12x. And again, as new updates come out, new acquisitions, whatever, this number will likely go up. That's usually how it works for the top performing companies. Now switching over to Apple though, there is a little bit of concern on the growth side. So September 2021, very strong growth. This is all the headlines that you've read about Apple, right? The increase in sales of their PCs, of their services, all the stuff that we've been seeing. But look ahead to September of 2022, which we're about to start looking at from an analysis perspective, meaning analysts are going to turn their attention there. The growth starts to slow, at least that's the projection. 3.4%. You got 2023, again, under 5%. And then it starts to go back up. So right off the bat, a big difference with Microsoft is the projected growth pace, not only on the revenue side, but also on the EPS side. So if we stop here and look at Apple's EPS growth, next year, right now it sits at 1.21%. I would be more inclined to say that this number hits 6, as I just mentioned here earlier. But you've got some pretty small EPS growth. And with a company this big, when the EPS isn't growing super high, you get stuck in this flat period, right? You get stuck in a flat period because your valuation metrics aren't changing. We'll see if it actually comes to fruition, though, because I myself have doubted Apple's growth many times after watching them, and they always pull a rabbit out of their hat. It's going to be interesting to see if they can do it again and prove analysts wrong. Okay, here we go with my price projections. I'm recording this on September 3rd, Apple's price is currently about 154. This projection is for January 2022. This would be when, let's see, their quarter 1 earnings call happens. So that might be January, it might be the start of February. I don't know if they've picked the date yet. So at that point, EPS projections will switch ahead to the fiscal year that ends in September of 2022. The projection at that point, I think, will have increased up to about $6. Like I said, analysts usually slowly raise it as long as they see good things out of the company. I expect Apple's had a great track record. I expect them to keep releasing new ideas and positive results. However, I do believe, as I mentioned earlier, that the forward PE that investors are willing to pay, not to mention the changing financial markets. We know that stocks are at a really high point right now. I think they come down a little bit. So I'm projecting forward PE to be at 25 times when we get into January, and that puts your price at 150. I'm just going to go ahead and say flat from today at 154. Give it some room to the upside, if you will. Don't forget, if you're an investor, you do get 88 cents a share. At least that's what Yahoo is showing right now. That could go up or down. They could have a special dividend. Really hard to project. But the real point here is that Apple here today in September, I have it down as flat heading into January of 2022. That doesn't mean that it'll do nothing, right? I would guess I would be more inclined to say we might say weakness, or we might see weakness take it down a notch, and then, positive news and all those things bring it back up. But from a dollar per dollar basis, you'll land about flat heading into next year. Now let's compare that to Microsoft. Same projection, January, except we'll be working off the June 2022 numbers for quite some time now. So basically, they are already knee-deep in their 2022 fiscal calendar. I'm putting an EPS projection at 925. And just like Apple, I'm bringing this forward price to earnings down just a couple clicks. I think we're at 34 today. I'm bringing it down to 32. I'm also giving them a bump to the consensus earnings because I think that they will produce good things. But that's still, look at this price, $296. It's actually $5 off, almost $7 now that I'm looking at the live pricing, $7 off from where we stand today. But I would still just go ahead and call it flat between now and January. Keep in mind, though, even if it was flat, you do get about $2.25 a share on the dividend. So you are still making money, even if both of these stocks do actually go flat. All right, guys, so that's a short-term projection for Microsoft and Apple. Funny that each one has their own pros and cons. It looks like on paper for the short term, Microsoft offers a higher revenue and EPS growth rate, at least into next year, how people are forecasting it. However, the valuations of both stocks put them in essentially a flat position, as far as I can see. Now, how would that change? Well, there's two ways that these stocks could eventually exceed flat, two reasonable ways. The easiest, in my opinion, would be to raise earnings per share. So perhaps a new product come out, a new contract, whatever it is. If they beat my EPS projections, that would allow the stock to rise a little bit. The flip side of that, though, is the valuation multiple. So we talked about the PE. On Apple, I had 25, right? 25x forward PE. If the market, for whatever reason, decides to put a higher multiple on it, perhaps where it is today at 27 or so, then of course the price would go up. And on the Microsoft side, if that were to go up a couple points, the valuation multiple that people would pay, then you would see the price beat mine. Right now, though, I think the market is more inclined to come off of the current valuation multiples. I think EPS, dividend, solvency of both companies, I don't think there's any real debate there. And they're so big that it's relatively easy to project their EPS. And I'm even giving them the benefit of upside. So I don't see a lot of change there. What we don't know, though, is where will the market be pricing assets at that time. To me, it looks like a world that we should see them come down, if only because the interest rate environment might be different heading into 2022. We're also going to be stuck in the winter, and God only knows what's going to happen with the pandemic situation heading into the winter. So I see it as slightly more risk to the downside in terms of valuations. But hey, I've been wrong before, so we'll see what happens. All right, investors, let me know what you think. Microsoft versus Apple. Both are high quality stocks, well worth holding in the long term. But which one do you think will persevere above the other in the short term? As always, thank you for watching. Please give a like, subscribe to the channel. We'll see you on the next video.